Well, Sappi fell to had a very difficult period in the fourth quarter of this year. Operating profit year on year down at $70 million is against $118 million. But it is an improvement on the previous quarter, which was even more difficult than the 3 months at the end of September. Ralph Boettger joins us from Sappi. Ralph, this has been an important transitional year for you.
Yes, Alec, it's been a very important year for us and a challenging one in many ways, but also a year in which we've had some very important achievements as well.
That I'm trying to work out here. You say that the demand for graphic paper in your main markets continues to fall, but you're going to continue to invest in that area, in particular in Europe. What's the thinking there?
Yeah, demand is continuing to fall, and we expect that demand to continue to decline by between 3 and 6% for the foreseeable future. What we are doing is to lower our cost base and to curtail capacity as we go forward in line with market demands. These investments over the next 3 years are directed at our 2 lowest cost world-class assets in Europe, our Kirkniemi and Gratkorn mills. And the investments will bring down the cost base of those mills very significantly to a point where we believe even at these declining prices and increased costs, we will be very competitive. So it's a two-pronged approach. On the one hand, we manage capacity, and on the other hand, we have to manage cost. And we'll probably end up with only 3 or 4 world-class large assets. The reason why we're not fast-tracking that and closing capacity at a faster rate is that all our mills are cash generative.
It sounds a bit like the story we hear from the airline industry. You've got to get rid of the old planes to bring in new planes which are more fuel efficient. Although it's a new investment, it brings your costs down and then it's sustainable.
Exactly the same. That is exactly it. Long-term assets, large capital assets, and you cannot afford to maintain and continue operating older, non-effective assets. In the long run, it simply doesn't work.
Ralph, I was reading through my iPad this morning an article in the Times of London about your long-time rival and competitor Mondi, which is now a member of the FTSE 100. They quite like the stock in London. And if one compares the stories of Sappi and Mondi over the past few years, you guys are running a very poor second.
Oh, absolutely. I don't think you can even compare the two companies. First of all, Alec, I think we're not rivals. We're not competing at all in South Africa in a very, very small part of the business. Mondi is a packaging company, a packaging paper company and specialized packaging, and we're a graphics paper and pulp company. So we operate in vastly different environments and vastly different product lines. Their demand for their product is growing. A large part of our product's demand is declining. So I don't think it's a fair comparison. What we are doing is actually moving our business to be less and less dependent on graphic paper and more dependent on our dissolving wood pulp or specialized cellulose and specialty papers. And that's growing, and the margins are really good.
The two of you were born in South Africa, and you were always listed alongside each other. I suppose that's why there's a perception that you are rivals. But coming back to our country, you own a lot of land, you own a lot of timber. Are you finding that the processes, the legal processes that are being installed in that area are becoming more challenging?
I don't think necessarily so. I think that doing business globally today is a challenge, and there are certainly different challenges year to year that one has to deal with. I think business in South Africa has become more complex, and we're dealing with not only commercial issues, but you're dealing with social issues, you're dealing with structural changes, which certainly has its challenges. But I don't think any company in South Africa can lay the blame of performance, in front of anybody else's door. One needs to work around that, and I think we're effectively doing so. A good example is the massive investment at our Godwana plant in Mpumalanga, which we completed, and it's up and running and that despite the labor challenges and all the challenges that one faces in South Africa.
Did that also bring the costs down at Ngondwana?
Oh yes, certainly. What it does is it brings down the cost on the paper side, but very importantly, it increases our capacity of chemical cellulose or specialized cellulose quite significantly. And that's a high margin growing business.
And that was Ralph Boettger talking to us from London. He's the Chief Executive of Sappi.